Welcome to another episode of the Pineapple Podcast. Today, guys, we have Emily Gavet Liu and Anson Liu, both doctors in the medical profession, and they're here to share with us their journey of coming into the real estate space. As you could appreciate, real estate is for everybody, and we all want to grow in this space, both as a secondary job or as a primary job. So, welcome to the Pineapple Podcast. Remember, it's all about being tough on the outside, sweet on the inside, and wearing your crown of gratitude proudly. Guys, welcome.
Thank
Thank you for
you.
having us.
Oh, my pleasure. Absolutely. Looking forward to diving into this episode because you bring to us a different flavor in terms of the profile of an investor because you are in one of the top let's say career paths, but at the same time you also see value in real estate. So I'm sure our viewers here are quite excited to get into the conversation of, well, tell us, how did you decide that real estate was going to be your second, let's say, career?
So during the pandemic, and even the few years before then, we were working some pretty long hours as physicians and feeling, I think, a bit of burnout in those careers. And we wanted something that would help us to be able to continue to work as physicians, but be able to make choices about what we did, to have more control over our day jobs by having a secondary source of income. They call being a physician, sometimes they call it the golden handcuffs, because it's like, a profession that tends to make a little bit more money, and it can be hard to switch into a different position, but it can be really time consuming, emotionally taxing, all of that. And so we decided to pursue real estate investing as a way to sort of empower us as physicians to make choices about what we wanted in our careers.
Love that. Absolutely. And look, on behalf of all the viewers here as well, we want to say thank you very much because we appreciate that COVID period was taxing on the whole world, but more so on the medical profession. Like, you guys were getting up. We were just worried about putting on a mask or showing up with people. You were in the front line. So thank you very much for all that you have done. We sincerely appreciate it.
Thank you. Thank you.
Thank you.
You're most welcome. So I love the fact that you're saying, you know what, there are alternatives, because you're right. You are in a profession, but it's a high demand profession too. And so people can't always be trading time for money. It's a clear example. I mean, you guys work long hours. You do, let's say, frontline work. You're dealing with people at a stressed environment or not feeling well all the time. But you also need to bring yourself back and take some time out and take some recharging of your batteries. And so to me, real estate now, you recognize, allows you to build that little bit of a nest egg, or to build a little bit of a future where at some point in time you're going to, your body is not going to be able to keep running long hours all the time, right? But income security is a fundamental piece for everybody. So you've decided to go into real estate. So when you came into the real estate space, was it like you had a clear vision of what strategy you were doing, or was it, I just buy a single family home and then learn as you go?
Yeah, so that part took some time to figure out through education and joining organizations such as Keyspire and having networking. So I think the fundamental thing there to just make that decision is to have everybody kind of decide what are their unique goals, because not everybody's going to want to give up their day jobs and dive into real estate full time. And maybe it's not something that's doable for everybody. And certainly for us, it's not really doable just to give up our physician jobs and responsibility and also the salary that's tied to our student loans and things like this.
Right.
And so everybody has to come up with a strategy. How much time do you have? The more time you have, the more you're able to do more active investments. So you have more hands-on to do the more day-to-day running, the management of the properties. Now, the less time you have, then it has to be more passive, where you don't have to spend as much time, but you make the money work for you. So I think that's kind of the initial point of decision for us. And for us, as you heard from Emily, is that we have jobs that are highly dependent on time. So basically for us to be able to earn more money, it's dependent on how much time or extra time we put in to get that extra funding. So because of that, it's not easy for us to be overly involved. So
Mhm.
we kind of already know ahead of time when, as much as it's appealing to do flipping and those types of things, we're just not going to be able to do it, given our circumstances. So I think it's very important to understand your financial goals, your time constraints, and what your lifestyle is going to be. So it was always for us that we knew that we wanted to keep our day jobs, but have more control over it. But then just invest a little bit of time and then make our money work for us and not have to put in too much extra time and get a second job. Because real estate, if you don't do this properly, could easily become a second job where you have two full-time jobs, for instance.
That's right. That's
Yeah.
absolutely correct. And I love the sharing on that because again, you're 100% right. Not everybody's ready to give up their day jobs. And in a lot of instances, before you can even decide to make real estate your full-time gig, you really have to build a plan that bridges you from where you are with your corporate world to getting into the real estate space. Because it does take time to build up enough of a portfolio where it could potentially replace your income, right? So
Yes.
this sharing is golden to me because again, like we say, many people are in that space of how do I manage both? Because it does require time on both sides, and it's only 24 hours in the day, right?
Yes.
So part of it too is understanding the strategies that are available as a real estate investor and where you can come in, where if you want to own bricks and mortar, you can still do that. But then what are some of the things you can do to minimize that demand on calls? Maybe it's property management, maybe it's something else that you have to put in place so that you could be free to do both sides of it.
That's right.
Yeah.
And
So
so you bring up a good point. So there's different strategies, but I think it's also very important for the viewers to really educate themselves on what the different strategies are, but more importantly, speak to people or learn about what are the time demands of what's involved in the day-to-day. Because what I find is that there's groups, real estate groups and Keyspire, so forth, you only just see the people buying all these buildings. Oh, I closed another 40-unit building. Oh, I closed another 100-unit building. Well, they're not actually aware of what are the time demands to do that. So there's a lot of legwork, for instance. So if you're in a position to have this huge purchases, well, there's probably 50, 60, 70 hours a week of networking stuff that's been going on for years and relationships been built before you can raise that kind of capital to close on those type of properties. But these are just kind of time demands um, and realistic logistical things that people have to understand what's involved in different strategies.
that's absolutely correct because everybody is at a different level when it comes to real estate. And you're right, they all invest their time in learning and developing. Obviously, the marketing and the postings, they'll get straight to business. I did this, I did this, I did this, without necessarily saying what the background work was or how much time was involved. Even closing those types of properties, sometimes it takes 6 months, 12 months before you can even close a deal like that, right? So without getting into that sort of thing, this is why the strategy you choose is fundamental to your success. And I think you said it earlier on, it took you a little while to figure it out. So now that you kind of figured it out, if you want to share with our viewers, what are some of the strategies you experienced? And then, what was some of the key learning that came out of the different strategies? And what are you into now?
We've done a few different things. So we've done some private lending.
Right.
We've done some private equity, investing
Nice.
with a corporation that, the money, our RSP money is sort of parked with them for 5+ years probably.
Right.
And then we have active investments where we have property managers. We haven't ever even seen most of the properties that we do own under that. So, in that regard, having a team is really important. I have always joked that like we're not very handy people. Like I can hang a picture on a wall, and that, although clearly I don't have one, but like I can change a light bulb. But like me seeing an investment property in person doesn't matter all that much, because I'm not going to know what I'm looking at anyway. Like I'm going to walk in and be like, I don't know, it's not falling down, it looks okay, right? But I need somebody like a contractor to look at it, or an appraiser, like we need to have a team anyway, because a lot of people I think get scared about investing from a distance, investing in a property that you can't go to or you can't see or something like that. But I'm not that useful in person. The skills that I bring to the table aren't the skills of like looking at the roof and seeing whether or not it needs to be replaced. I have to rely on somebody else. So that's, I think some people are going to have those skills, and it's better for them to invest in nearby properties. That's awesome. But those just aren't the things that we're bringing to our real estate investing journey. And so it's fine for us to invest far away and have a team that helps us with that. So we have, property managers for all of our properties. But, one thing that I think sometimes people go into this believing that with a property manager, oh, like it's going to be totally hands off and all.
Right.
It's not. Like we've had a police raid, we've had we had a flood, we've had we've only been doing this for 2 years and we've already had, some big issues. I think you just have to accept it as part of the process. And if you, go into real estate investing, you have to know that. I was listening to somebody once that is a real estate investor, and he said he thinks of himself as a problem solver. And I thought that was really interesting, because you can't avoid problems. You just have to get good at solving them. And the more experience you have, the more, you'll be capable of doing that.
Absolutely. I love how you frame that, because that's important. And guys, you heard it right here. You don't need to know everything about a property. What you do need is a great team of people around you. And I think, Emily, that's exactly what you're alluding to. It's like, yeah, you don't know anything about the properties, but if I come to you with an ailment, you can fix me up and send me back out, right? But the fundamentals are true. And this is one of the biggest secrets or the biggest teachings is get your team in place. And these are property managers, real estate agents, your mortgage brokers. These are the people that you need around you all of the time, because they are the ones who are going to make your investment worthwhile. Top of that, I love the fact that you shared with it you're a problem solver, because there are things that you're going to get phone calls for. There's a big flood. Yep, the manager is going to call you. There's a toilet broken or repair on a countertop. The manager deals with that. Straight with the tenant, doesn't involve you. But at the end of the day, it's your business and it's your investment. So any high ticket items, you're getting the calls, right? And rightly so, because at the end of the day, you're running a business too, right? So you want to be as hands-off as possible, but you still need to be aware of what's going on with your property to make sure it's viable, make sure it's rented, make sure that it's being taken care of,
Yes. Yeah, so I think along with what Emily said, it goes along with just like some of the basic business principles that we've learned over the years, is that you don't want to try to get good at every single thing. You can't. So, for example, as doctors, we're not all of a sudden going to invest 40 hours a week extra on top of our jobs and learn building codes and construction and electrical work and plumbing and all those different things. That there's other people who've invested 40, 80 hours a week over their lifetime for years to get good at this. So to leverage this better, it's better to team up with these people and free up our time to maybe do something else that we're good at, or managing more purchases and so forth. And just having a team to help you, a team carefully selected where each person's an expert in their own area, so you can have more leverage in your time. Then you don't have to worry about learning all these things yourself. You can just like call these people up, and they all have the expertise that they've earned for many, many years. And then you bring the whole team together and make it work. And then you just kind of like a project manager. Then you frees up more time for you to go on to the next project.
100%. And real estate is one of the best examples when it comes to business philosophy of who, not how. It's not about
Mhm.
learning or doing. It's really finding the right people in the right place that can make things happen. And in real estate, you would find that the property managers, they are very passionate about what they do. Same thing with the tradespeople and the contractors and the framers. When you start talking to them, they do this on a daily basis and they love it, right? You, on the other hand, when you are the investor, the way I frame it is, you are really the entrepreneur. You're the business person. You need to now take the bird's eye view on your business. You shouldn't be the one that's nailing up framing the walls or answering the calls. You really need to take the holistic approach of saying, okay, my business is multi-level. I have the let's say the medical income, I have the real estate income, and I need to have resources in place for both, right? And so you resource yourself accordingly, which means I need people in place. Maybe I need on the medical side, maybe I need administrators, maybe I need somebody for daycare for the kids. On the real estate side, I need to know I have solid managers who can deal with problems to a certain level before you get involved, right?
That's
And
right.
then it leaves you to even think broader, whereas in the next 5 years, I think we'll be doing X dollars in revenue from our jobs. We want to take a portion of that and we want to put it back into real estate because it's a longer term play where you're building wealth. And maybe it's the generation for when you're in your older years. Maybe it's to give out to the kids because you want them to have an advantage when they grow up. So to me, that's the best approach. So Anson, I love the way you frame that because it really does make sense for the investor to understand, hey, you know what? This is how you can do it. And this is how you can keep your day job because you love it or you have commitments or the value in your day job is so significant to society that you really can't give it up just like that, right? So I love that. So within the strategies guide, whether it's multifamily, if it's short-term rental, what was the strategies you explored and you really learned to love and gravitated towards?
We focused a little bit more on like the smaller multifamily. So we have some duplexes, we have a fourplex, and
Nice.
it's like we have one that's technically a sixplex, but it's like 3-row homes that are suited.
Okay.
So like it's technically 6, but really it's
Right.
like 3 duplexes essentially. So we've taken a course about multifamily investing. I think it's certainly something that we're interested in, but what we've really kind of been hesitant on in terms of launching into the bigger multifamily space is the time commitment for it. Because it is something that if you're going to do it, you need to dedicate time for capital raising, you need to dedicate time to oversee the property, and you have to be really kind of tight with overseeing your property managers because we've had some good property managers, we've had some not so fabulous property managers, and if you're not on top of them, you can lose a lot of money. We are living proof of that. And so if you have a huge multifamily building and you have people that are investing with you, you really need to be on top of what is going on in that business. And if you can't do that, if you just don't have the time or the energy or the interest in it, then that's probably not the space for you to invest in. So that's why we haven't chosen yet to go down that path. Maybe we will at some point. And we have some we have a short-term rental that's in construction phase right now, so we haven't closed on it yet, so I can't
Nice.
speak to that strategy
Right.
yet. But yeah, sort of like the smaller multifamily, because I think they're just a little bit less hands-on requirement on our part.
Absolutely, because again, the number of doors you're dealing with is lower, so the number of calls is lower, And I love that. The fact that you've kind of found your groove. You don't want to do single family home because again, that's just a one door business. But on the multifamily, you can go up to 4 doors where the bank still considers it a residential type investment, but it's in the multifamily space because obviously duplex is 2 families, right? So with finding that space, I love how you share that knowledge because it is absolutely true. You got to find the strategy that works for you based on your current lifestyle and situation. So later on, if you wanted to get into the bigger space, yeah, for sure. Lots of people are doing it, but they've also made commitments on their time that this is what they're going to do on a full-time basis or a large basis, because now you're talking, that's a business in itself. Like you need to have a full team of people there, and you need to be available to answer calls and answer questions and to work that out. So now that becomes the job, which is probably in your case not where you need to be right now, because you're still doing two sets of businesses. So you're building that bridge that eventually you'll get into whatever space or dreams you want to get into real estate, maybe as your demands on your personal time is reduced, right? But definitely that's a long-term play. And that's one of the things too I want to share with people as well. And you guys are perfect examples of this, where you embrace the fact that you wanted more. And a lot of times we question ourselves, am I doing the right thing? Is this right for me? And I know you guys are very big on the mindset space as well. So just for our viewers as well, when they're coming into that transitionary period where they've made the decision, they've come in, now they realize, I've got to learn a lot. I have to talk to people. I have to make decisions that now I'm a bit uncomfortable, and sometimes they backtrack. Sometimes they embrace it and they go for it. So, what are some of the things that worked for you in terms of when you made the decision, you said, yep, we're all in, we're going to go for it. And like Anson, you pointed out, there were a lot of things that came up that you just didn't know was there, right? How did you deal with it and embrace that from a mindset perspective?
I think the first thing is to accept that you're not going to know everything about everything. And then if you try to like quote unquote know everything before you do anything, you'll do nothing. So we classically call it as analysis paralysis.
That's it.
So initially just accept the fact that you are not gonna know everything, and actually doing something and then tripping up here and there is part of the learning process, and just accept that that's part of the learning. And if you don't do anything and get involved and make some kind of mistakes and things like that and stumble, you never really learn anything. So you just have to accept that you can't be perfect, you can't know everything. And that the fact that the best time to buy real estate was yesterday. Quote from Scott McGillivray himself. But with those principles in mind, I think the mindset should be, just educate yourself enough to make that first purchase and then get started from there. And then just have the mindset that this is going to be an evolving process where you grow with every purchase that you make. Because for us, we learn a lot during these conferences with different courses and things like this. But then really the biggest learning experience is when we actually started buying ourselves, because there's a lot of things that the courses don't actually tell you about what happens in the transactions and the paperwork and things that are due, and then the issues with like the appraisers being backed up, and then now you have to wait for that, and then losing out on properties because you have to put an offer quickly during the pandemic. There's none of that stuff. So we had to learn all this stuff by doing.
Absolutely. No, I love the fact that that is as real as it could get. And for you, for our viewers as well, this is a clear demonstration of, if you embrace this challenge, there's enough community space, there's enough people, there's enough resources for you to reach out, to connect with people, and to really learn from their experiences as well. I mean, thank you guys for sharing it, because I think there is value in people learning the real story of how you build yourself up into real estate, and over time you get stronger and better, right? Mm-hmm. So that to me is absolutely golden in terms of what that could look like. And maybe you can share with us, how did you determine the markets that you wanted to invest in? Because again, you could literally invest anywhere in the globe. In our case, we look at Canada and more so the USA as well as our primary go-to markets. What are some of the fundamentals that you found interesting that lean towards a certain market or a certain province?
So I think for us, in Canada, we picked provinces that are generally a little bit more landlord friendly. Not that we're against investing in Ontario or BC or something like that, but they can be a little bit more challenging sometimes. The set of problems that comes up in those markets
Yes.
is different than the set of problems that might come up. You know, in Ontario, you're going to have probably, and in BC, huge appreciation. But you're also potentially going to have some more headaches around tenants that aren't, you know, maybe always paying and what to do about it. And like, it's just a different set of problems. So we invested in Alberta and in New Brunswick, primarily because those are a little bit more landlord friendly. And then we're moving into the US space. We're both from the US, well, not from the US, Anson's from Australia, but
Right.
we were both in the US before we moved to Canada. And so we still have a lot of connections in the US. We're still US citizens. And so I think, you know, there are some doors that are open to us in the US, and they have some really nice markets that I think we would like to go into next. And again, focusing on states in that case that are more sort of like business friendly. And it's not to say that you can't be a successful real estate investor. There are people that only invest in Ontario or in BC that are very successful real estate investors. So it's not to say you can't do it. It's just not the strategy that we wanted to choose for our business.
That's
Now, the other
absolutely,
consideration we had too, being fairly new at it, we didn't want to take a lot of risk. Hence, that we wanted to then pick places where things cash flow.
right.
So depending on where you live and how much you buy things for, there's different types of play. So some people play the passive appreciation game where they're gambling on traditionally high passive appreciation rates to then refinance and pull the money out, but then they're barely cash flowing or maybe in the negative. Well, we were a little uncomfortable with that, and we didn't want to have to raise vast amounts of funding to be able to buy, you know, things in Ontario, BC, where there's over $1 million, $2 million each, just to start.
Right.
So picking places where there's a low price point, high rents relative to a mortgage allows us to start and play, right? And comfortably without risking a lot. And then going where the money is. So finding places where it's a low starting point, high rents, but then relatively good appreciation rates. Traditionally, looking for cities where there's high growth, there's infrastructure coming in, there's maybe some type of factory plants or some type of population growth. Traditionally, that is the ticket. And this is
100%.
kind of, yes.
Yeah, totally. Because what you know, the way you're framing this, and again for our viewers, is in real estate, there basically is no apology. You have to decide what is the strategy that works for you. So a few things I want to point out here, because I think what you're giving us is really golden information here. So the first strategy is you recognize that you did not want to play in the rent-controlled markets because it is very difficult to navigate around the rules. And sometimes you have tenants who are sitting in a place, it's $500 they might be paying because they've been there for like the 15 years gone, and the rents today is $2,000. To get that situation turned over does require a lot of experience and a lot of negotiations, and probably wouldn't happen at the same time. So if I'm coming in as the new guy, I need to decide, am I ready for that or not? And I love the fact that you said, well, there's friendlier markets across Canada where you can get into, and that is absolutely true. And if typically it's Alberta, New Brunswick have changed. They are now putting in some controls, but the idea is they allow you as a landlord to run your business so that you can be a little more successful with regards to how you run the business. And by that, you also get to find good quality tenants that would always be ready to pay at market value because they know they're going to get back value. The other things that you said is absolutely true. There are 4 and 5 ways to win in any deal. Cash flow is one of them where it could work or it couldn't work. If you give up cash flow, it's because you're looking for appreciation. Appreciation is speculation at the end of the day. So it has worked in the last 20 years for sure. No questions asked. A lot of people that you talk to, how did they make money? Yeah, the properties just appreciated. This year, as you could appreciate, it's basically a very soft market because Government has intervened, and now you are basically on the borderline of a recession, right? So property's value will go down. So if I'm in the speculation market, I'm in trouble. If I'm in the cash flow market where I want the property to be healthy and sustain itself, I'm okay, because even though I might pay more, there's cash there on a monthly basis that could cover the incremental cost. And I really wanted to point that out for people, because these are some of the fundamental decisions you have to make as an investor, and don't be shy about it. Review it, talk to people, if you're in a coaching program, talk to your coach, and then make the decision, because you have to be the one that's managing your business, right? We'll all give advice. I'm always happy to share advice to people and give them an opinion, but you are the one who's going to be in the driving seat, because once you sign that paperwork and that property is yours, you got to deal with it. So by setting a clear business plan in the beginning, that is how you win. And then don't be afraid to revisit your plan every year. Set a new plan, because your situation is changing. Your goals are going to change. Your cash requirements are changing. So planning to me is the fundamental for this. I often say to our viewers as well, to our students as well, you got to take the time to plan. If you're planned, you are right there for success, because now you're going to be clear in terms of the property you're looking at, the strategies you want to employ, the funding you might need, the markets you're going to invest in. Those are fundamental. And when you have a clear vision for it, then it makes your life easy, because then everything that shows up suddenly may not be aligned to the goal. So it's easier to say no, and you avoid analysis paralysis.
Something you said I really like, Mitch, there, that I want to emphasize is be nimble, be flexible. There's no room for rigidity. So here, go back to the business plan. Things always change. You have to count on change as a constant. So for instance, we talked about, and you mentioned that New Brunswick and Alberta have tightened up their issues with the tenants and the landlords, and there's probably a little bit more favor towards the renters now, and more restrictions for the landlords. And so then that forces us to kind of make a pivot. And also the prices and things like that have changed, and the interest rates are no longer making those markets as favorable as before, and this is why we're taking a shift and looking somewhere else. So I want to encourage people not to have a rigid plan where you're not able to flex. You want to revisit what your core values are and where you want to be, but if things change, you want to be able to be flexible to make a switch in the direction in which you're going to meet the goals that you have.
Absolutely. I couldn't say it any better than that. That to me is the perfect summary, because there is a saying, and it's absolutely true: change is the only constant, right? And you said that as well, because in business, if you are not flexible, you're going to be in trouble. You have to flex based on situations, because there's so much in real estate that you do not control. Government intervention, mortgage rates, rules around the Tenancy Act. Like, there's so much that just out of your hand. But what you can control is you can decide how you're going to work with these rules or not, in which case you select a different market or you select a different strategy. Like, there's so much, but you got to be aware of what's happening in your market. And I think education and awareness is critical to that. Because while we talk about the fact that, yep, we want to be hands-off as possible because we're doing too many things and we need to be efficient, you also have to have awareness across the board on your day job, on your real estate investing, on your strategies, on government announcements, interventions, things that are, the gurus in the industry are talking about. You got to always be in the know, be aware of it. So I think one of the key things here too, as you rightly pointed out, is awareness. Like, know what's happening so you can pivot if you need to.
Mm-hmm.
And I think, I love the fact that you shared that you guys are looking into the US market, because that seems to be the sexy conversation right now. It's all about the US market, right? One of the best things I loved with you framing this, because I get the questions often, well, how do you invest as a Canadian, or how do you get into the market? And I don't know anybody. but you have decided that it makes sense for you because you've been there, you have connections. So what I love with that is, guys, this is possible if you have the right team, the right connections in place. And if you don't, then that's one of the first challenges. Who do I need to find? Who do I need to talk to in order to put those things in place, right? So the transition can be as easy as you say it is, because you've done the pre-work, you've lived there, you have your documentations for there, you are in a different position. So I just wanted to reframe that because I love it. And I do know there's a lot of people right now that are very much interested in the US market because, again, it's a very different market from the Canadian market, right?
Mm-hmm. It's a bigger market. Like you just have more people, more states, like you just have so many options. And you have to be mindful when you invest in the US that every state has different rules. And so, you like around landlord tenant kinds of things. So you have to be aware of where you're investing. You can't just be like, I'm just going to throw money at the states, right? Like you have to actually pick a state for a reason, and take a look at the rules that they have in place and get a good team set up there.
Absolutely. And the network is available. But again, do your homework, make sure you connect, you talk to people, you understand who's doing what and things like that, right?
Mm-hmm.
Cool.
Yeah. And you want to be careful about how you set up your business. Like, honestly, I'd say for us, one of our biggest team players is our accountant, because our businesses are kind of complex. Like we each have our medical corporations and several real estate corporations and stuff like that. Like it's really complicated. And I've mentioned this to Anson before. I'm on a women's physician group, and sometimes I'll see these ladies that are doing like TurboTax. Like they're all physicians, and I'm like, oh my God, please just hire an accountant, right? Like it's that phrase, stepping over dollars to save pennies, that, they see a big accountant bill in the beginning and they're like, oh no, that sounds like too much money, without recognizing you're actually probably costing a lot of money. Like our accountant last year saved us so much in taxes. We pay taxes, right? Like this is not about evading taxes. Like we pay taxes, but there are rules in place that allow you to be as tax efficient as possible. Have an expert do it. To me, it's almost like Googling your symptoms as opposed to like going into your doctor. Like get the right people. And an accountant is, to me, probably the first person, because you want to know how to set your business up before you launch into it.
100%. I mean, you couldn't frame it any better than that, because the rules are continuously changing. And let's face it, when we are in our career paths or business path, we don't know all the rules. And if you're doing a tax yourself, you're going to miss a lot of things that the government has put out there for you to benefit, and you're just unaware of it. And if you're unaware of it, that is money you're paying that you shouldn't be paying. It's always about being tax efficient, right?
It's not about how much you make, it's about how much you keep, right? So you need to keep as much as you can legally, and have an accountant to help you with that.
And then if you're going to invest in the US, it's a must. You have to have an accountant that knows Canada and US taxes and the implications of both, so that you can make the right strategy. Otherwise, you're going to step into something and then there'll be tax implications that you're not aware of.
Yeah, you might be paying double tax if you don't have the right structure.
That's right.
That's right. Absolutely. So, I mean, that's great sharing for sure. Well, guys, I want to thank you so much for coming on the Pineapple Podcast, sharing your stories. At this point, is there any sort of last minute tips or techniques you want to say before we say our goodbyes?
I think the biggest thing that people need to, the two biggest things, I guess I would say, are one, educate yourself, and two, network. Like without those as your foundation, you really can't be as successful as you would like to be as a real estate investor.
And then 3 and 4 is after you educate and network, do it. Jump in, accept the fact that the only way to learn is to actually do it, learn by doing. And then don't forget, at the end of the day, you have to enjoy your life, enjoy your time, enjoy the real estate journey. Otherwise, you're going to do a little bit of it, just give up. That's number 4. Biggest thing. Find a way to really enjoy it. Enjoy
Yeah.
talking to your contractors, your team, your doing your business and running it, and have a good time doing it. There's a lot of lovely people. We've made so many friends through different real estate communities that have become our personal friends.
Mm.
Beautiful. Absolutely true. And again, guys, remember, you heard it from Anson as well. It's the journey is the destination, not the end game, right? So once again, everybody, thank you so much for joining in, hearing our story today. Emily and Anson, thank you so much for being a guest at the Pineapple Podcast. And folks, remember to hit the like, subscribe, and notification button as we grow our base. And remember, it's all about being tough on the outside, sweet on the inside, and wearing your crown of gratitude proudly. Bye bye, everybody.
Bye-bye.
Bye bye. Thank you.